Welcome back, investors. Today I want to talk to you about a company that has really caught my attention in the last couple of weeks. This is a company whose share price has increased by over 1600% in the last month alone. Yes, you heard that right, 1600% in just a few weeks. The company that I want to talk to you about today is 88 Energy, and they are listed across multiple stock exchanges such as the OTC under Eeenf and under the ticker 88E on both the ASX in Australia and the AIM in the UK. So, 88 Energy have announced big news in the last few days, which has seen their share price double since Monday. Before we get into the video, if you like the content, can I ask you to smash that like button? It literally costs nothing, but it helps me out so much. Small channels like this only grow if the videos are getting likes. It shows me that you want to see more content like this, but it also helps the video get seen by showing the YouTube algorithm that viewers like this type of content. We are aiming for 200 likes in this video, let's make it happen. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. Do you think 88 Energy is undervalued or overvalued? And what are your price targets for 6 months or a year? Leave a comment down below, I want to know what you think. Make sure you watch the entire video. And don't enter into any stock blindly without viewing all information on offer. I want to point out that I'm not a financial advisor and this is not financial advice. At the time of this video I do not hold a position in 88 Energy, but that might change in the coming weeks and months. Now let's get into it. 88 Energy is an exploration and production company engaged in the exploration of oil and gas at the Alaska North Slope region. The North Slope region of Alaska is home to some of the largest oil and gas fields in the world and is North America's most prolific oil producing region. The company's goal is to build a successful exploration and production company that delivers material benefits to its shareholders and contributes to the development of the regions in which it works. It aims to achieve this by targeting overlooked or emerging play types to capitalize on opportunities prior to larger industry players moving in. The opportunities the company seeks are based on robust technical evaluation together with informed socio-political decisions and cultural sensitivity in business relationships. 88 operates two main projects: a 200-acre operation at the site of Project Icefine and a 195-acre project at the site of Project Perigene. As we can see here from the North Slope oil and gas major discoveries map, we can see that both Project Perigene and Icefine are located in the same region as Cuparuck and Prudhoe Bay, which is the largest oil field in the USA. Prudhoe Bay was discovered in 1968 and has produced over 15 billion barrels of oil to date. 88 began working on Project Icefine in 2015 and significantly increased acreage up to 200,000 acres. We see here that Project Peregrine is in green because it relates to when 88 acquired XCD Energy in 2020. The merger was set to create a diversified portfolio of 3 key project areas in Alaska and become a company with significant increased scale and demonstrated operational capability that is focused on the world-class oil potential of the North Slope of Alaska. The company also has a smaller 15,000 acre site, Yukon Leases, that has a 90 million barrel potential. As we see here, under Project Peregrine, drilling is to commence in March 2021, which leads us on to the big news. 88 Energy on Monday told investors that logging whilst drilling data indicated multiple potentially hydrocarbon bearing zones in Merlin 1. The initial data confirmed the presence of the Nanyuchuk Formation, which contains the company's primary exploration targets. Additionally, it reported that oil shows were recorded over multiple intervals. The company similarly noted that fluorescence was also observed in the drilling mud, accompanied by petroliferous odor over 3 of the target intervals. Subsequently, a wireline logging process will gather further data, insights, and detail to define the intervals. By Wednesday, the company confirmed that the start of the wireline work and said results are expected over the coming weekend. The wireline program aim is to determine whether mobile hydrocarbons are present. This will be a key step to answering the key question among investors, whether or not the encouraging results to date will ultimately manifest in a newly commercially viable discovery. 88 noted that a mandatory test of the well's blowout preventer would precede the wireline logging, and once underway the program is expected to take 5 to 7 days to complete. The company intends to complete the well and flow test, which would yield further data and indicate potential production volumes. Success will potentially unlock a substantial bounty. Consultants estimated some 645 million barrels of mean prospective resources for the Merlin feature. At that time, ERC penciled a low case estimate of 41 million barrels and a high case estimate amassed some 1.46 billion barrels. Best estimate was of 270 million barrels, and it is estimated the geological chance of success is 37%, which is a comparatively high marker for greenfield exploration projects. Evidently, these numbers would represent a significantly transformational breakthrough for the company. Given the high level of speculative interest in the share and the possibility of a binary outcome, it's perhaps obvious that 88 Energy will continue to be closely watched stock in the coming days and weeks. Furthermore, on Wednesday morning, the company also confirmed the remaining conditions to its acquisition of the Umiet oil field, also in Alaska, are now complete, following cement work to plug and abandon 2 historic wells on the site. 88 said further remedial site work will be finalised in the near term. Test data available to the company shows historic rates from 3 wells between 200 and 800 barrels of oil per day, or a mean total of expected barrels of 1.6 billion, with a low estimate of 131 million and a high of 3.7 barrels. The management team is led by Managing Director David Wall. Mr. Wall was a leading oil and gas equity analyst for 6.5 years. He brings extensive experience with junior oil and gas exploration companies. His skill set spans asset evaluation across many fiscal regimes, play types, as well as corporate advisory, mergers and acquisitions, and equity capital markets, having led over 400 million in capital raisings. We can see that experience shine through in the acquisition of XCD Energy in 2018 and the $12 million capital raise last month. Mr. Wall brings strong commercial and strategic skills, as well as generalist knowledge across all levels of the oil and gas industry. This is complemented by financial markets experience focused on junior exploration companies. Mr. Wall holds a Bachelor of Commerce from the University of Western Australia, majoring in Management and Finance. Overall, this is exactly the type of guy you want leading the company, because exploration and mining companies usually take a long time and massive costs incurred before they ever start to see revenues. It's important to have somebody who not only understands the industry, but also has financial experience. Mr. Wall fits the bill perfectly. Eric Opstad is the General Manager of Alaska Operations. He has 37 years of energy project management and technical experience, including with BP in Alaska, conducting both offshore and onshore operations. Mr. Opstad joined the 88 Energy team from Savannah, Alaska, where, as principal in the company, he served as drilling and wells manager and general manager, driving geoscience and engineering redevelopment activities. Eric holds a BSc and MSc in geology from the University of Iowa. Before we look at the financial statements, keep in mind that it is usual to see massive liabilities in this type of company before any revenues are recognised. Looking here at the balance sheet as at December 2020, total assets of 85.5 million against total liabilities of 26.5 million, giving an asset to liability ratio of more than 3 to 1. This is great. From that, we can see that nearly $15 million is made up of cash and cash equivalents. And comparing that to 2019 figures, where the company had assets of 93 million and total liabilities of 29 million, again the ratio was approximately 3 to 1. This is a great balance sheet to see for this type of company who have not yet seen any revenues of note. When we look at the income statement, we can see here that the company has no revenue yet from operations, and other income of $246,000. This is expected of this type of company. This gives a total loss after tax for the year of $22 million, down significantly from last year's $37 million. The loss in both years has been made up primarily of other expenses amounting to $30 million in 2019 and $16 million in 2020. When we look at Note 3, we can see that this expense is primarily made up of an impairment expense. And looking at Note 9, we can see that that impairment had come from the Winks 1 exploration wells, which was plugged and abandoned in 2019 and relinquishment of leases in 2020. Again, there's nothing to worry about here. This is part and parcel of the industry. Not every exploration site will produce oil, which is what makes this industry so high risk and reward. Although these financial results were only published in the past month, they do relate to December 2020. Since then, the cash position has been further improved through a placement to raise $12 million in February. It's worth noting that as well as being successfully completed, it was heavily oversubscribed, and the $12 million was raised through the issuance of 1.5 billion ordinary shares at a price of 0.008 Australian dollars, less than 1 cent per share. When we look at the charts over the past month, we can see that 88 Energy has been on a steady rise. From as low as less than half a cent a month ago to as high as nearly 8 cents on the 31st of March. This represents a whopping 1600% increase in the share price in a month. As we see here, the share price has consistently jumped in price, then consolidated before jumping again, and this has been done 4 times over the past month. When we look at the chart over the past 5 days, we can see that we are still very much in an upward movement. And even with this huge drop down from nearly 8 cents down to its current price of just over 5 cents, this is still within the channel, and I expect it to bounce back up again, especially with the upcoming catalysts of the wireline results coming over the weekend. So guys, that brings us to the end of the video. I hope you enjoyed it. If you did, drop it a like. It really helps the video get out, and it really helps the video get seen by more people. If you've watched all the way through, then fair play. I hope I've shared some information with you that you weren't already aware of, and I hope you found value in this video. If you're new to the channel, hit that subscribe button and bell notification. So what do I think? First, I want to say that I think this is an exciting time for 88 Energy, as this possibly represents the starting point at which the company might begin to recognise revenue from operations, although there is still a long way to go in that process. These types of companies are always risky, and although the preliminary data looks good, there is the possibility that there might not be anywhere near the amount of oil that they think there is. Although the possible rewards are high, there is also the possibility that after a feasibility test they could potentially conclude that going further might not be commercially viable. It is not uncommon at all, as we've seen this from the financial statements. The company's major expense from the past 2 years has been the impairment cost, which is from plugging and cementing of previous drilling. This is common in this industry, and this is why not many of these companies succeed. But when they do succeed, the rewards can be massive. The other concern that I would have is the level of dilution. As we've seen back in February, the company issued 1.5 billion new shares. That's a huge share dilution for any company. Although the balance sheet does look strong enough that they don't need any further dilution. Overall, it's high risk, high reward play. So please guys, only invest money that you can afford to lose. As always, this is just my opinion, and if anyone is thinking about buying into the company, I encourage you to do your own research. As I said before, I'm not a financial advisor and this is not financial advice. Thanks for watching the video. What are your thoughts on the future of 88 Energy? What is your price target? Leave a comment down below. I'm interested to hear what you think. Catch you in the next one.